So hello everyone and welcome to my channel Giri, and this is Shubham Giri here. This video is gonna be a very interesting one to all of the students who are thinking to apply abroad. No matter what the country is, no matter where you want to go for, or in general. So today we'll be discussing about loans, the collateral based, the non-collateral based, and what sort of documentation is required, what kind of requirements are specific to the specific kind of the loan, and what sort of interest rates are going around in the market at this point of time. So there are a lot of factors, a lot of things which we'll be discussing in this video. So make sure to watch the video till end so that you won't get half as this knowledge, half as this information, and you would really get something that would be really useful to you after spending your 10-15 minutes whatsoever it is in this video. So hope so you get tuned, you are tuned with us, with me till the end of the video. And yeah, so let's start.
Everybody get your fucking hands up.
So firstly, to broadly classify the loan criteria or the loan types, we have two main types. First is the collateral based and second is the non-collateral based. Now, for collateral and non-collateral, both have their specific requirements, and the first thing that you need to know is whether you are suitable for a collateral one or the non-collateral one. Now, how would you know that? So simply, if there is you are going to pay your fees, and if you are going for GICs and all, so it's pretty much clear to you before even applying that if you have the funds or not. If you have, let's just say 50-60% of your funds, and you want to have the remaining 30-40%, so you should go for the non-collateral based, like you don't have to submit any collateral, and the amount is roughly between 7 to 7.5 lakhs in all the banks that gives you education loan without any collateral. Now, that won't be the case if you are thinking of applying for a loan which will fund your GIC, which will fund your whole tuition fees, which will cover your whole tuition fees. So, in that case, you have to go with the non-collateral one, because once your loan amount gets above 7.5 lakhs, in any bank in India, most of them follow the same rule. So if it gets above the 7.5 lakhs bar, you have to go for the non-collateral based loan system. So this is as far as the basic and broader aspect of loan division works for. So the another most challenging question which everybody has, and which everyone should have and everybody will be having who are thinking of getting a loan or even are applying for loans: what are the interest rates and how are the interest rates gonna affect your studies, gonna affect your amount which you have taken the loan for. Now, to put it very simply, first, till the time you are completing your course, your amount would be simple interested. By that I means it would be compounded, but on a yearly basis, not on the monthly basis sort of EMI structure. So by that I means is, suppose you have taken a loan of 10 lakhs for the first year of your graduation. Now, mind you, the moment you take your loan from the bank, the interest starts, and that is mostly between 8 to 12% annually. That is simple interest, and then it will be compounded after a year. So if your simple interest comes up for 10 lakhs, it comes, if you take 10% as a reference, so it's 1 lakh per year. So by the end of first year, you would have to pay interest of 11 lakh rupees. That would amount to 1 lakh if you are taking 10 lakhs again for the next year. So that's how it works. So if you have to, if your course is of 1 year and you have paid, taken a loan of 10 lakhs from the bank, so you are liable to pay 11 lakh rupees at the end of a year, provided you haven't paid any interest in between their time. So how would that affect you? We will talk that in the later part of the video, and that would be really helpful. That would be a golden tip to all you guys who are going for loans and searching for loans and all those things. So if you keep this particular thing which I'll be discussing in the end of the video, if you keep that in the mind, it's a very possible chance that you are gonna save like a lakh or 1.5 lakhs in, I would say, just without doing anything extra. That's what the term is. So, coming back to the topic, so simply, the interest rates for the nationalized banks in India is roughly around 8 to 9.5% per annum of your amount, and interest is always charged for the amount they have given to you. So if you are applying for a loan of 20 lakhs and you have taken 5 or 7 lakhs in the start or for this first semester or maybe then the second semester, so you are only to be charged for that particular 7 lakhs. You won't be charged for 20 lakhs all. So that was a very very basic question which I had in my mind when I was applying for my loan procedures. So there's this manager of the bank who's a very good friend of my father's. So he told me like this is how the process works. So it's really authentic. I'm not just making anything up. So hope that helps you. So for the nationalized banks, it's anywhere between 8 to 9.25% or 9.5%. For the private banks, it's a floating sort of interest, which I won't cover in this video. Just Google it up on yourself. So they have a bracket of interest. Sometimes it would even go more than the bracket or the listed amount. So please make sure if you're taking loan from the private banks, make sure to read the agreement. Make sure to read the contract very keenly and very precisely, so that you don't get messed up in those logical and the controversial terms. So just make sure that you do that. Even if you're applying for a nationalized banks, please make sure you read all the contents, because once you are there, nobody's going to help you. That's why, even if your parents are there, are here in the country, still it would be a very very big hassle to to organize everything on by staying there and all those things. It would really take a lot of time, effort and money and everything. So please make sure you read all the documents very carefully. Now, the third segment of this video, which is quite a question which is asked to by many of my friends and some of the people who have come to know me through YouTube. So they have Instagrammed me, messaged me, and they asked me like, you should make a video on this, and how should we decide which bank I should go for. Now that is very very, I would say, that's totally dependent on you guy. Like I can't comment on that, but what suits you best should be decided by you only. If I say you go for XYZ bank, that really has no meaning at all, because that bank may be good for me. Because see, for the government or the centralized banks or the nationalized banks, one thing goes very well, and mind you know that if you have a very good track record, that means if you have taken up any previous loan, any EMIs or any credit card bills, and you have maintained your CRS score, that means you have paid all your EMIs on time, you don't have any dues on the banks, and you have quite a good amount of savings in that particular account. So the procedure for loan in that bank would be very easy for you. But compared to that, a bank in which you have no account or whatsoever, they don't know you, and that means that they don't have a history of you in their bank. So they would really be charging you a bit more than the normal interest. Now that is totally, most people don't know that, but the interest rates are flexible. They are like the minimum bar would be there, it's 8 or 8.5, and the maximum would be 9 or 9.5. But what to give is totally dependent on you, your track record, and the bank people who are giving you the, by far they have a judgment criteria. They have sort of a listing like this person is suitable for this much amount and all those things. But yeah, a personal human touch always favors you. So please keep that in mind, that you have a good track record in the bank in which you are applying for loan, so your loan would be hassle free and very fast. That is what the point is. So just you need to clear this in your mind before even thinking of going for applying to a, so even if the interest rates are a bit higher, I would say that go for them, so that in the long run it won't affect you much, because you have a good track record and the banks personally knows you. So your application for the loan would most likely be sanctioned very easily. That is the point. Now, for those of you who have been with me till the end of the video, now the golden tip about the banks, about the loan process is you need to know that uh, your amount is compounded annually. And as far as all the people I know who are thinking for applying in SDS category, now for those of you who don't know non-SDS, what is SDS and what is non-SDS, maybe I will make a video on that topic, a separate video on that topic, so that it would be clear. But for those of you who know, or those who are thinking of applying in SDS category, no matter what your annual fees is, annual tuition fees, that means for my university is $14,000, but still I have to pay $23,114. Now, how so? So basically, a year has 3 terms. That means Jan, that is winter intake, May, that is spring intake, and September, that is fall intake. So these 3 intakes students are learning. The classes are going on. So actually, there are 3 terms in a year, but that is totally upon you. If you want to study for the 3 terms continuously, you can, but that is dependent on you. Like if you want to have a break of 4 months, 1 semester, or something like that, you can do that also. But when you're applying for SDS category, the demand is that you should give 1 year tuition fees. Now, $14,000 is also acceptable. That is acceptable. But the recommend, like I talked to a lot of my friends who has applied for the visa and they have got the visa, and a few of those who haven't gotten their visa. So there are a lot of issues for the people who have not get the visa. But for the people who got the visa, one thing was common, that everybody of them paid $23,114. That means 3 terms fees in a single year. So, and why am I telling you this? How would this be impacted? How would this actually benefit you? So that means that $20,000 would be, given by you to the institution. And one thing is for sure, that dollars amount is gonna go higher and higher and higher. And how would this affect you? Now here's the catch. So if you've paid the amount that is in dollars, and when you convert it into currency, so I would say $10,000 would be roughly at 5,90,000 something at today's rate. But this could go higher as well as a bit lower. That is possible. But if you have paid this amount, like $23,000, so they need 23,000. That is a fixed amount. That is not gonna go up and down. But the Indian currency rates are gonna jump. The conversion rates are gonna jump. So if you pay the whole amount for 3 semesters or for a year in one go, that would be really beneficial to you, because once the conversion starts, it's very likely that your amount, the tuition fees you are thinking of giving, would still be $7,000 or $10,000 or $11,000, but the conversion rate would increase, and that would easily cost you 50, 30 to 40k rupees, Indian rupees. That is the tip number 1. Now, secondly, how to negotiate the interest rates. So if you tell your bank, there is this provision in every bank, and which I also came to know recently, that if you give them in writing, that especially for the non-collateral people, please listen to me very carefully. So if you give them in written that you would be paying your interest as monthly, that is like if you have taken a 7 lakh or 10 lakh rupees loan, and the interest rate is 10%, which is on the higher end, so it is 1 lakh rupees of interest in a year. So if you're willing to pay 8,000 rupees a month, like 10 divided by 12, so it would be something like that, basic number. So 8,000 rupees per month, your interest rate would be lower than the normal people. And thirdly, if any female watchers are watching this video, it's a very good chance that Bank of Baroda or any nationalized bank have interest rates lower for the female candidates than the male. But I applied for my loan with the interest rate of 8%, 8.1 to 8.25. Now this is the interest rate in the bank which I have applied. If you want to know, please message me. I would tell you, because I cannot disclose a name, simply. So for the female candidates, you still have a provision that you would be charged 0.5 or 0.75% less interest than the normal average male guy. But for the male people, if you want to really decrease your interest, this is the only way, that you tell your bank to that you would be paying your interest monthly while you are studying, which is not a very big amount, 8,000 rupees, that's roughly $1 to $150. And that is payable by you as well, even after your savings. But if that is totally, judgmental, and that is totally upon you if you want to do that or not. But if you are satisfied with the 9% interest rate, it's totally good. If you want that to go a bit lower, that is 8.5 or maybe 8.45, try this method, and I'm sure that this would definitely work, because there is this provision in every bank. Most of the loan people won't tell you, but since this manager is a very good friend of my father's, they told me like, you opt for this, and then the interest rate would be a bit lower than the normal interest rates for the educational loan. So that's pretty much it for this video, and hope you like it. As far as all the procedure which I have covered for the loan and all, what kind of documentation is required. So it's basically four things. If you're going for collateral, all the collateral documents, their title clearance, uh, there's this another thing called evaluation of your property. So you have to get these two things done, and then your loan is pretty much sorted. Because Aadhaar card, PAN card, and everything, that is what you all guys know, that KYC is related. Like, KYC is a basic necessity for anything these days, let alone loan. So yeah, the main two important things would be title clearance and a evaluation of the property which you are keeping collateral. If you're not keeping any collaterals, the 6 months bank account, all the valuation of a property and all those things, those are still necessary. But title clearance would be unnecessary. So that's additional 6 to 7,000 rupees INR kharcha. I would say that that is the cost of the title clearance as well as the evaluation. So for me, it was around 6,000 rupees overall for the whole process. So this is pretty much all the documents you need. So sorry if you think that this is a clickbait, but yeah, this is pretty much everything. Even if your father is a salaried, or if your mother is a salaried person, so you would need to have ITR or 16 number forms, or the payment slips of last 3 months from the industry which they are working. That's pretty much it. Everything. Like, yeah, that sums it up. Still, if you have any query or questions, please message me on Instagram. I am not mostly free. I am free after 7 or 8 p.m. in the evening. So that is my habit time, and that's the time when I shoot these videos, or I think about what sort of content I should put so that you guys like it, and that would be really helpful. So I got this comment from my previous video, and I was really happy with that single comment. So yeah, that's why I thinking like I'd be doing this for quite a long time, maybe. Yeah, so see ya guys, sign off.